How do you plan to manage expenses and track financial performance? Effectively managing expenses and tracking financial performance is essential for the success and sustainability of your business. Here's a comprehensive guide on how to plan for expense management and financial tracking. Establish a financial system. Accounting software. Choose a reliable accounting software to streamline financial processes. Popular options include QuickBooks, Xero, or FreshBooks, but this might vary depending on where you are, what sort of business do you run, and so on. Chart of accounts. Set up a clear and organized chart of accounts that categorizes expenses, income, and assets. This structure facilitates accurate tracking. Budget development. Create a detailed budget. Develop a comprehensive budget that includes all anticipated expenses. Categorize expenses as fixed and variable and allocate funds based on priority. Expense categories. Fixed expenses. Identify and list fixed expenses such as rent, utilities, insurance, and salaries. These are recurring costs that remain relatively stable. Variable expenses. List variable expenses including marketing, supplies, and maintenance. These costs may fluctuate based on business activity. Cost control measures. Prioritize expenses. Prioritize necessary expenses and assess discretionary spending. Identify areas where cost-cutting measures can be applied without compromising essential operations. Negotiate contracts. Regularly review contracts with vendors and negotiate better terms. This can lead to cost savings and improved cash flow. Expense approval process. Establish approval procedures. Implement a clear process for approving expenses. Define who has the authority to approve purchases and ensure adherence to the budget. Receipt and invoice tracking. Receipt management. Implement a system from tracking receipts and invoices. This can be done digitally or through a physical filing system. Expense tracking software. Utilize expense tracking software to automate the process. This enhances accuracy and reduces the likelihood of errors. Regular financial reviews. Monthly reviews. Conduct monthly financial reviews to assess actual performance against the budget. Identify any variances and investigate the reasons behind them. Quarterly and annual assessments. Perform more in-depth assessments quarterly and annually. Use these reviews to make strategic decisions and adjust the budget as needed. Cash flow management. Cash flow forecasting. Develop cash flow forecasting to predict future financial needs. This helps in managing cash effectively and avoiding liquidity issues. Credit management. If applicable, manage credit terms with suppliers to optimize cash flow. Negotiate favorable payment terms whenever possible. Financial statements. Generate financial statements. Regularly generate financial statements including income statements, balance sheets, and cash flow statements. These statements offer a holistic view of your business's financial health. Key performance indicators or KPIs. Identify KPIs. Define key performance indicators related to expenses and financial performance. Examples include gross profit margin, operating profit margin, and return on investment. Regular monitoring. Monitor KPIs regularly to assess overall financial health and make informed decisions. Expense reporting and analysis. Expense reports. Require departments or teams to submit regular expense reports. Analyze these reports to identify trends, areas of overspending, and opportunities for improvement. Variance analysis. Conduct variance analysis to compare budgeted expenses with actual expenditure. Identify any significant differences and adjust future budgets accordingly. Employee training. Expense policy training. Train employees on the company's expense policy. Ensure that they understand the importance of adhering to budgetary guidelines and submitting accurate documentation. Forecasting and planning. Long-term planning. Integrate expense management into long-term planning. Consider future growth, market changes, and industry trends when developing financial forecasts. Auditing and compliance. Internal audits. Conduct internal audits to ensure compliance with expense policies and budgetary guidelines. Identify and rectify any discrepancies promptly. Tax planning. Tax compliance. Stay informed about tax obligations and deadlines. Plan for tax payments and deductions to optimize your tax position. Continuous improvement. Feedback mechanism. Establish a feedback mechanism for employees to provide input on expense management processes. Use feedback to continuously improve procedures. Adaptability and flexibility. Adapt to changes. Be adaptable to changes in the business environment. Adjust expense management strategies based on evolving market conditions and business needs. Risk management. Identify financial risks. Identify potential financial risks and develop strategies to mitigate them. This could include economic downturns, supplier issues, or unexpected expenses. By implementing these strategies, your business can maintain a proactive approach to expense management and financial tracking, ensuring financial stability and the ability to make informed business decisions. Regular reviews, adaptability, and a commitment to financial transparency contribute to the overall success of your financial management efforts.